Business vertical. Business vertical means a distinguishable component of an enterprise that is engaged in the supply of individual goods or services or a group of related goods or services which is subject to risk and returns that are different from those of the other business verticals. Example, for the purpose of this class, factors that should be considered in determining whether goods or services are related include the nature of the goods or service, the nature of the production processes, the type or class of customers for the goods or service, the methods used to distribute the goods or supply of services, and the nature of regulatory environment including banking, insurance, or public utilities. For example, a person is running the business of plying lorries and textiles. These two are different business verticals. Let us get down one by one. Business vertical means a distinguishable component of an enterprise. Let us recall that AE 17 deals with segment reporting. So business vertical means it is a separate component of an enterprise that cannot be interlinked with another component, and as such it is separate in nature. So it is a distinguishable component. It has its own unique features and it is engaged in the supply of individual goods or services or a group of related goods or services which is subject to risk and returns that are different from those of the other business vertical. Suppose you have two business vertical. The risk and reward of one business vertical is different from the risk and reward of the other business vertical. That is what being told there. It is a distinguishable component of an enterprise. Point number one. Engaged in the supply of goods or services. Point number two. Which is subject to risk and returns that are different from the other business vertical. The risk and return of one business vertical should be different from the risk and return of the other business vertical. So there must be some factors to determine whether it is a separate business vertical or not. The nature of the goods or services. So you have to check out the nature of the goods or services to finally come to a conclusion whether it is a separate business vertical or not. Suppose if the nature of the goods is such that both cannot be combined together, then what it requires? It requires separate business vertical. Nature of the production process. Suppose if there are two production processes and those two production processes are completely different from each other and they are both unique in nature, then you can just conclude that the outcome of the process or that particular business process can be a separate business vertical. The type or class of customers for the goods or services. If at all the type of customer for one business vertical is different from that of other business vertical, such that both are not same, then you can call it a separate business vertical. The methods used to distribute the goods or supply of services. What are the methods by which you are distributing the goods, or what are the methods by which you are supplying the services? The nature of regulatory environment wherever applicable, including banking, insurance, or public utilities. For example, if it is a banking environment, the regulatory environment is different from that of an insurance sector. So as such, they cannot be put together. So both can be, if at all an organization involves in a banking sector as well as insurance sector, then both are different entities by itself. Example, a person is running the business of plying lorries and textiles. These two are different business verticals. So it is a business of running lorries. Another one is the business of textiles. So can both be put together? No. So one is into supply of goods, textiles. The other is into service sector. So both are different. The customers, the type of customers for plying lorries and the type of the customers for textiles, both are different. The production process for textile is different from that of plying lorries. Then, if at all, what is called the method of distributing the goods in case of textiles is different from the method of supplying services in case of applying lorries. So both are different, both are poles apart, and therefore both can be called as separate business vertical of a particular person. Next. A person having multiple business vertical in a state or union territory is permitted to obtain separate registrations for each such business vertical. Suppose there is a person, he has his own PAN number, only one PAN number, but he has got some 2 or 3 multiple business verticals. So each of the business vertical can get its own separate registration. So, for example, if it is in the plying of lorries, it can get separate registration. For example, if it is in the textile business, separate business registration. So, both will have its own separate registrations as far as business verticals are concerned. And a person can have a maximum of 35 business verticals within a state. And next, supplies between business verticals are deemed to be taxable supplies. Suppose, for example, there is a supply between one business vertical and the other. They have inter-supply and it is said to be taxable supply. The supply between the business vertical is a taxable supply and therefore GST is levied on the taxable supply. Let us recall that inter-branch supplies between states is also a taxable supply. Similarly, supplies between business verticals is also a taxable supply. In the case of composition scheme, the option to avail composition scheme is PAN based and hence a person has to opt for composition scheme for all the business verticals across India and not for a particular business vertical. Let us suppose that there are 5 business verticals for a person and he has a turnover of less than 75 lakhs and he wants to go for composition scheme, and in that case either he has to opt for composition scheme for all the 5 business verticals or he cannot opt for composition scheme for any of the business verticals. If one business vertical, if you apply composition scheme, then automatically you have to apply composition scheme for other business vertical. If you apply normal scheme for one business vertical, then you have to apply only normal scheme for other business verticals. You cannot have a mix and match. You cannot say that I will go for composition scheme in one business vertical and normal scheme in other business vertical. It is not possible. You have to be uniform as far as composition scheme is concerned. Either everything should be composition scheme or everything should be in normal scheme. Next, capital goods. If you just recall, in service tax, capital goods is given lot of restrictions and definitions. Service tax listed out those goods which could be called as capital goods. But as far as GST is concerned, the definition of capital goods is very much simple in nature, very much simplified in nature. They have put the definition is very wide in nature, very simple in nature. What is the definition? Capital goods means goods, the value of which is capitalized in the books of account of the person claiming the input tax credit. The first condition is that you have to capitalize in the books of account. So if you have your accounting entries and in your accounts books, whatever goods you have capitalized, and those goods can be called as capital goods for GST purpose also. So whatever goods you have capitalized in your books of account for claiming the input tax credit can also be called as capital goods for the purpose of GST. So the meaning of capital goods is very much wide enough. And next condition is that they should be used or intended to be used in the course or furtherance of business. That is, the capital good should be used for the purpose of business, even if it is not used. There should be intention to use it in the business. So the first point is the capital goods. The criteria is that The value should be capitalized in the books of account of the person who is claiming the input tax credit, ITC. Second is, it must be used in the course or furtherance of business. And these two conditions are sufficient to call it a capital goods under GST. So this definition is very wide in nature. It is completely different from the existing definition in service tax. So relatively the restriction placed on capital goods is very low as of now.